Good morning, traders. This is Stephen Davis with RJO Futures here in Chicago. Friday morning, beautiful morning. Going to be 55 degrees today. So we're going to talk about the agricultural markets, and I'm going to talk bullish about soybeans and bearish about corn. Let's back up a little bit. We talked to you last Friday before the USDA report. In the corn market, we breathed a sigh of relief. The carryout numbers were not above 2 billion bushels. So we're making this adjustment from 1.8 billion carryout in corn, not the 2 billion, 2.2 billion. That was the high end of expectations. So what happened? We had a little bit of short covering in the corn. Like Monday, corn was up 10 cents. So today's range in corn is less than 5 cents. So there's still a lot of corn around in the market. And as we rally, it becomes a selling opportunity. The cure for low prices is low prices. We talked about last week ethanol plants coming on board. Cargill bought a Tate & Lyle ethanol plant in Fort Dodge, Iowa in 2011. It's been idle till now. You're going to see ethanol plants that have been idle come on board in Ohio and Indiana. This is where all the corn is in the eastern corn belt this year. So the demand story for the chicken producers are going to increase their production, and the ethanol guys, and this is a boom for cattle as well. So already some of the major fertilizer companies next year are projecting corn acres down to 90 million, and we had 95.3 million this year. So that'll change the balance sheet. But for now, we're in this never land here, as we're done with our harvest for all intents purposes, and South America is coming on board over there with their production. So as we move into the end of the year. Another comment too is the public's not involved in bear markets. So as we move into the holiday, a lot of times bear markets, which we have in corn, become very, very quiet. So and hedging in 2014 and 2015 is going to be very important. So another thing I want to say is listen to the markets. Many times the markets will tell us what to do. So if the corn market gaps higher and doesn't fill that gap in a couple of days, that becomes bullish. A weekly, monthly reversal ups. Keep an eye on that. These are rare chart patterns. If it happens, something's going on, and that's going to change the technical picture of the market. So switching over to soybeans, we're trading the U.S. balance sheets in soybean, 170 million bushels. That's tight. That's not a lot of soybeans around. We had a 72-cent rally in soybeans since last Friday. That's the function of the soybean market, is to trade to higher prices and get the farmer to sell. So we've done that. The U.S. farmer, been a good seller of soybeans here. They're a little more tight-lipped on their corn. Their corn is stored. So as we speak here, January beans are under 13. Keep an eye on that level. That's important going forward. Soybean meal exports very robust in November and December, this time period. So 4 things to keep an eye on for next week. The demand, export sales. We got crush numbers out a little later this morning. The ethanol numbers every week. Number 2 is South American weather. Very benign right now. The temperatures are 70 and 80, but every year something goes wrong in South America, so keep an eye on that. Country movement. Will the farmers sell on rallies in soybeans and corn? And then for the managed funds position, last week I'd said to you that the funds have record long soy and soybean meal. They don't have record long, but they are long soybeans, they are long soybean meal, and they're short the corn market. So as always, futures and options on futures could carry substantial risk. They may not be suitable for everybody, and we'll talk to you next week. Have a great day and a great day trading. Thank you.